Here's some of the challenges, JG, is how confusing is this freaking market? We've got an overbuild, a potential overbuild in purpose-built rentals. We've got a absolute overbuild in the condo market. And I don't care really where you go in Canada, but Toronto's in a huge meltdown. That continues to be the case, as does Vancouver. I think right now, by the way, in Toronto, I want to say the most recent data, and I might be off on this, is 60 months. So 5 years of supply based on sales of condos. So, 23,000 units that have come online for sale. Anyways, so we got purpose built, then we got condos that are going to be rentable, then we got the government, they're going to build 4,000 rentals. Anyways, that's just sick. Anyways, and so then we look at it and say, well, okay, but let's unpack this a little bit more. They're not building single family detached, which is what people want to live in. And it's because the numbers don't work. So developers have done what? They're taking advantage of CMHC, MLI Select. They're building purpose built because that's where they can make deals pencil. That's where they can have some cash flow given rents and all the things that are happening in the world. But the spike in multifamily, like purpose built, is off the charts. And then we add to that. So will it be off the charts forever? No, but there's going to be lag. So there's going to be some real discomfort in some regions for those developers who are playing the multifamily game. So I'm pointing that out to everybody. And I'm not saying it's a doom and gloom scenario. I'm saying that in the next couple of years, it's going to take a while for absorption of all those units coming online. So if you're in the multifamily space, you better be paying attention to what you're producing for a product, how competitive you're being in terms of your maintenance and the look of your units, because you're going to be competing against a lot of new units. And so be very conservative. That's the word.
Patrick, right here, you can see on the chart that I'm putting on the screen here, you can see where CMHC came out with their policies, right? Right here, it was like the 2022, 2023, when purpose-built rentals were starting to trade sideways. They came out with their policies, and then bam, it's just like literal vertical straight up. And at the end of the day, what investors, and hopefully if you're watching this show, you're either are an investor, you're curious about investing, I don't know, but if as just like from a super high level perspective, Patrick, these three, condos, rentals, and single family, let's call these asset classes just for sake of easy math, easy argument. What do you want to invest in? An asset class where the supply is going through the roof and there's going to be a ton more into the future, or an asset class that is significantly underproduced? And, the odds are is its value will hold up a whole lot better because it has been so underproduced. And that's the single family asset class.
So when we look at two, though, JG, when we consider, like when you do the analysis and you look at the purpose built that is coming online, and, will demand, be there given immigration is softening and all the rest of it. So there's going to be a time where there's just going to take a lot. Where's the absorption going to come from if immigration is down and we've got this seemingly overbuild scenario in some regions? And so especially in the major cities, like whatever major city across Canada you've got, short of maybe what's going on in Quebec, because that's a whole different culture and view of rentals. But my point is that when you look at the overbuild scenario that's potentially there, and then the lack of affordability, there is one thing that we've talked about in the past I want to shine a light on again, which is those who cannot afford a home will need a place to live. And so what are they going to move into? They're going to, of course, have to rent. And that ultimately is going to be it. And the affordability issue that people are kind of tripping up or bumping up against is in that single family detached, maybe semi-detached units, which are not being built. So what we want for housing isn't even being built. And so MLI Select program, by the way, when it kicked off, it was the right program. It did exactly what we needed it to do, was to get rental supply on the market, because as you recall, it was really thin. Now, having said that, like all government policies, all government initiatives, they stop. What's the phrase? They go too long and stop too short. I don't know.
Yeah, exactly. Too little too soon and too much too late.
Yeah, 100%. And so this is the direction things are going. And oh, by the way, they're tweaking the program again, I'm told, No announcement's been made. They're tweaking the program again to make it more accessible by small developers, because they swung to the other side. You were talking about it, I think, as well, as like, what are the fees and how much more difficult. They're talking about tweaking it again to bring it back, which is you're going to have you as a developer, where are you going to put your money? I mean, you're doing ADUs and you're doing a whole different model for the most part. But for those who are building multifamily, I mean, you're playing an interesting game. You better know the market that you're building in. That's kind of the warning there.
Yeah, it's definitely a fascinating time for sure, Patrick. And yeah, I mean, at the end of the day, it's been fascinating to watch, because their policies and how they handle it, especially compared to the open market. That's the thing, is that when you engage CMHC, you're essentially buying an insurance on the open market. And as a result, you can manipulate the open market rates, if you will. And that's what makes these deals penciled. You get 40-year amortization, you get up to 50-year amortization. So you're willing to pay a bit more of a hefty interest rate if you can amortize it over 50 years. But Patrick, it's interesting, because it is a manipulation of the open market in a sense. It is a government insurance that is manipulating the actual open market. And I mean, my fundamental belief is that if you let the open market do its work, typically it balances itself out pretty darn good. When you start messing around with it, that's typically when you get hurt. That's what I've noticed over the last 20 years.
Well, and again, I mean, this isn't, at the end of the day, the government is always going to do what the government does, which is, what do I have to do to get votes? What do I have to do to engage people? Because they want an answer today. So I'll tell them what the answers are.
So if you like these episodes and you want to learn more about what's going on with real estate in Canada, investing in real estate, and understanding how to invest in real estate the right way, head on down to the descriptions below, follow those links.